Bismillah ar-Rahman ar-Rahim wa salatu wa salam ala Rasulil Karim. Assalamu alaikum and welcome to Takaful online course. And today our discussions is on the resolution number 44 of the Sharia Advisory Council of the Central Bank of Malaysia, and we are talking about the Takaful coverage for Islamic financing. And the issue is as follows. Basically, the SAC was referred to the issue on whether it is mandatory for an Islamic financial institutions to offer a Takaful coverage as the first option in covering the financial financing received by the customers of the Islamic financial institution, meaning that there is a financing whether it is either mandatory to impose on the customer that the coverage on this Islamic financing should be Sharia compliance coverage, meaning that it is an Islamic insurance, or there is an option to grant him a coverage on the conventional insurance. So basically the resolutions are based on the SAC in the meeting 41, which was held in March 2004, and also the meeting 43 meeting on 29 April in 2004 resolved the following points. Number one, for an Islamic financing package which does not include an amount of contributions for coverage, meaning that this is the first scenario, an Islamic financing package, but the contributions is not part of it, which means that the Islamic financial institutions is not financing the premium. The Islamic financial institutions is not financing the coverage part, being Takaful or otherwise. So that one is an excluded. In other words, the Islamic financing is covering the financing excluding the coverage, being insurance or otherwise. So that's number one. So it is a package without coverage, contributions, financing. So here the Islamic financial institutions shall offer Takaful plan as a first option to the customers who basically apply the financing or the Islamic financing that require coverage. So meaning that the Islamic financial institution should put the Islamic financing, meaning that the Takaful as one of the first options in their offer. Now, however, the resolution says that if the customers refuses the Takaful plan for a particular reason, because keep in mind in the market, you know, the Islamic financial institutions are dealing with a Muslim and non-Muslim, and it could be that customer is a non-Muslim, and when he offers the Takaful or the Islamic insurance, so basically he refuses this Takaful plan. So that one could be the reason. So the customers may choose any conventional insurance, meaning in that case, when the customers reject or doesn't accept the package of the Takaful, so he may choose any kind of conventional insurance he wishes, and such an exception is only given consideration to the following factor. So this factor should be under observation. Number one, if the insurance premium is totally borne by the customers, which means that the financing part is provided by the Islamic financial institutions, but the coverage of the conventional insurance is not financed by the Islamic financial institution, but it is borne by the customer. That's the first option, or this is the first condition. Number two, if there is a sector or a specific class in insurance whereby Takaful has no expertise in it, because some kind of business sectors the Takaful has no expertise, and the Takaful operators is not able to provide that coverage. And as a result of that, the conventional insurance comes into the picture, similar to the Takaful business, reinsurance business, whereby some of the Takaful they don't entertain some of the scope of the business sectors due to the high risk, or this one is very high and diverse business sector, which there is a lack of expertise and it is not within their scope. So as a result of that, they would reject and decline the coverage. And the condition number 3 is that the customer's applications was rejected by the Takaful company on a certain ground, meaning that a person applied for Takaful, but the Takaful, his plan or his proposal or his request was rejected. So in this case, basically, you can proceed with the this kind of options as mentioned in the resolution. Now, the second point highlighted by the resolution is that for the Islamic finances package, that includes the amount for contributions coverage. Now, the first one, we are saying that the package of the Islamic financing excluded the financing of the portions of the Takaful coverage. That one, it should be an option again, and if it refuses so, it could be entertained under this kind of circumstances. But these conditions is that the amount of the coverage contributions is financed by the Islamic financial institutions. That includes the amount for contributions coverage. Now, the Islamic financial institution shall ensure that only Takaful plan is used to cover the Islamic financing. So meaning here, there is a must that the Islamic financial institution must entertain only Takaful plan and cannot entertain conventional conventional insurance, and the reason being that portions of the Takaful coverage has been financed by the Islamic financial institutions, whereby in the first scenario we mentioned that financing is excluded. This is why it could be allowed. But this one, in the second case, that portions of coverage is financed by the financial institutions. Therefore, you cannot entertain a conventional one. So conventional insurance premium shall not be included in the financing in the Islamic financing package, as we have mentioned. The point number 3 in the resolutions is that if a customer who has taken a conventional insurance package, so a customer has obtained a coverage of a conventional insurance, meaning it's a policy, conventional policy, for an Islamic financing, and he passes away. Let's say he has a house financing with an Islamic bank, but his coverage insurance is not Islamic but conventional insurance, and after that he passed away. So, or suffer any kind of peril that resulted in his inability to pay the financing. So he has any kind of circumstances, risk, dangers, whatever risk that put him in a position that he's not being able to pay the financing. Now, the Islamic financial institutions is entitled to receive the conventional or the compensation from the conventional insurance, which means that in case he has a financing with an Islamic bank, but the policy of that financing is from the conventional one, and that guy passed away. And of course, when you have a policy against, let's say, a mortgage, so definitely the compensation on the policy will be assigned to the financial institution in case he passed away. So basically, the coverage and the sum amount will go to the Islamic financial institution as a beneficiary. So the resolutions here say that the Islamic financial institution is allowed to receive such compensation. And there are some arguments here and discussions for this kind of scenario that has been discussed. And one of the reasons is that, as we mentioned, in the market you have a different customers. So you have a Muslim, non-Muslims, and even some Muslims, maybe they have some kind of relationship and existing policy with the conventional insurance. So basically, when they go to the Islamic financial institution, so they will insist that they have to choose their insurance policy. They have to to select their insurance coverage, and those insurance companies are basically not Takaful but conventional. So it could be allowed in the scenario number one, meaning that the customers has to finance his contributions, and that contributions cannot be financed what's so called under the Islamic one. This is under the what's so called the MRTA. The other point is that even though he financed his he put his conventional policy insurance to cover his mortgage or any other asset upon his demise or when he passes away, so definitely the Islamic financial institution will be the beneficiary, and it is entitled to receive that kind of compensation in order to settle the outstanding debt of that customers. With that, thank you very much, and inshallah see you in the coming resolutions. Wassalamu alaikum wa rahmatullahi ta'ala wa barakatuh.